What's going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to go over some of the data points, break it down, what moved it, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So today was another rocky day. SoFi went down 3.2%, 23 the high, 21.86 the low, and we had roughly around 63.4 million shares being traded. So first thing, we did have a lot of volatility. That's because the market still wanted to be fearful, but we had some pretty solid data. In the second half of the day, we did start to kind of get dragged down with the broader market, only because of Palantir's earnings. And there was clearly some fear that Palantir's earnings was going to cause a same level of ripple effect in the market as what happened with Microsoft. Luckily enough, I think Palantir hit a home run earnings, so that might be potentially a good thing for tomorrow, but still, the market is very, very fearful. Aside from that, we did have some good data that came out. First thing, like I said, so global manufacturing came in at 52.4, forecast of 51.9. ISM manufacturing, which is more of a smaller control group, came in at 52.6. Forecast of 48.2. Anything above 50 shows more of an expansion. Anything below 50 shows more contraction. So all in all, this has been phenomenal and no different than a lot of the other manufacturing data over the last several weeks has all really been on point. So that was kind of a good thing. Aside from that, there really wasn't all that much in news associated to SoFi. No new interviews. There was a couple new ratings that was posted. So you did have Morgan Stanley, Jeffrey, who has a 40% success rating, giving a $18 sell. Needham, $33 buy. Kyle, who has a 44% success rating. Also 24.50 UBS, 28 Barclays, 24 TD Cohen. So as a consensus over the last 3 months, 25.50 is the price target, representing a 15.49% upside. Over the weekend, or I guess prior to these six, whatever coming out, we were sitting at the 27.50-ish range. So that has gone down quite a lot. And still most likely, I would anticipate another about 3 or 4 new ratings to be coming out over the next couple of trading days. So again, just something to possibly look forward to, hopefully. But then again, we do have 2 of the bears. So KBW, Compass Point, most likely giving some ratings, probably negative ratings. But aside from all of that fun stuff, when it comes down to shorts, they did return 930,000 shares. So that hands down was extremely bullish because, as I've said many times in the past, there is a lot of available shares to short. So the fact that they did return versus not doubling down based on all the kind of fear in the market is extremely bullish if you ask me. 9.03% of the free float is being shorted, works to be 112 million shares overall being shorted. Cost to borrow minimum still being negative as per usual. Shares on loan did drop dramatically, so most likely post SoFi's earnings, there was a couple institutions that probably did sell out that were probably lending out their shares, most likely. That's why the available shares did drop. But right now we do have another scenario of naked shorting, so there's more shares being shorted than on loan. So kind of crazy stuff as per usual, but then again, that's just a normal day for SoFi. 42 million in calls, 23 million in puts. 39% of all the options being done were bullish in nature. So today a little bit more evenly divided, but still consensus was bullish. From a bull standpoint, you see a consensus for it to recover to between that $24 to $25 range. So that's kind of optimistic. There's a lot of big data coming out the rest of the week. And then regarding even the shutdown, I saw some things as well that I guess there's a 75% likelihood that it will be less than about 5 days of a shutdown. I don't really see that being that big of a deal in my opinion. That's not really a good catalyst, only because it's already been priced into the market, most likely last week, and no different than last shutdown. It didn't really affect the market. We had 1 or 2 negative days and then we kind of forgot about it. So I don't really see the shutdown being that big of a deal in my opinion. Of course, I could be wrong, but aside from that, the bears are anticipating for it to be sub kind of 21.50 to 22. So definitely a lot more upside than down. These are all the transactions that did occur on the secondary market above $100,000. So leading into kind of power hour, you did have some institutions selling, largest being 47.2. These are all the transactions that did occur on the dark pool above $100,000. Big one was 11.2, and then 2.7, 2.02, 2.02. So I'm sure a lot of that was hedge funds, a lot of hold numbers right there. So that's most likely, again, hedge funds. With SoFi right now at 22.08, it is trading between this S1 and this S2. So 22.28 was going to be that key level. So ideally early on tomorrow, we kind of get above that, then hopefully have a nice little bit of a recovery. If not, 21.31 is going to be that next strong support. And so that's obviously not the greatest. On the actual chart itself though, as I've kind of been warning, this 200-day moving average is generally a big deal. And unfortunately today was day number 1 that we did close below it. So typically 2 consecutive days does really confirm a trend. Luckily enough, every single time SoFi is broken below like a key level, like it just somehow gets magic powers and it just starts to go higher. So big money has always been kind of coming in, saving the day for SoFi. This time seems a little bit different. A lot of people again are comparing it to back in April of 2025, where it kind of was the last time it did break below that 200-day moving average. So as you can kind of see, it didn't really last all that long, roughly around a week and a half. So this is where, in general, I know I don't really give a lot of recommendations and stuff, but I've been investing since 08, so there's been plenty of these types of downtrends. One thing that is a absolute killer is margin. So in my opinion, just be very cautious for those of you that are using margin, because things could get very scary very fast, but typically those kind of scary periods are very short-lived, and then we kind of have a nice rally post that fear. And unfortunately, that fear can really trigger a lot of stop losses in some cases and margin calls. So do your own due diligence. If you want to go all in with margin, that's obviously your thing, but just a little bit of a FYI and recommendation. But yeah, as far as the chart itself, the only thing positive is the fact that it is extremely oversold. So let me know your thoughts on SoFi. Are you buying the dip? Are you selling? Aside from what was the options I did last week, I didn't do anything new for SoFi, so I'm just kind of sitting back because the chart is starting to break. And the difference between SoFi and a couple of other kind of growth stocks is SoFi during this period right here between like December and January, SoFi held up much better than the broader market and a lot of other growth stocks. Whereas during this time frame, a lot of stocks were already breaking below that 200-day moving average. So SoFi right now is just starting to kind of experience what a lot of stocks did like 3 weeks ago. So I think overall SoFi, it could have a little bit of a push lower. So as I mentioned, just kind of refer to this. So 21.31, 19.75 as support levels if you're wanting to dollar cost average, swing trade, or whatever else. So let me know your thoughts on SoFi. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that, appreciate all of you watching.